Hey guys, this is no look at ZB starting on the weekly log scale charts. ZB has had a total technical breakdown here out of its long-term weekly channel right here. And it struck me that ZB has done on its fifth wave essentially what ES did on its fifth wave on its weekly log channel, which is ES punched up and out of its channel and ZB punched down and out of its channel. So, I think I had been lulled into complacency down here by the series of channels that we've had on the smaller time frame where the third and fifth waves almost inevitably found support at their channel. And so I think I was caught, not giving enough weight to the bearish read on this. And we got confirmation this week. I think we'll see it on the hour chart that this weekly closing variation of the channel was the one to watch. And after this week right here, I mean, you can argue that we broke it right here on a closing basis by a few ticks, but they could not close a weekly candle back inside the channel. And then there was an ugly rejection this week. So, lesson learned, don't get lulled into complacency on the smaller time frame to thinking that that will translate to the weekly log scale chart, because it certainly did not in this case. The high on yield today was, well, we're there, 322. So we're going to have a weekly close well above the secular channel right here. Yeah, just huge technical damage done in both directions, yields and price. So if we go to the time frames here, ZB, it really telegraphed its intention this week. And so if we just walk through what happened on the hourly chart, I'll show you what I mean. So we came out of that double top, the fourth wave high, and we had a 5-wave move down. 1, 2, 3, 4, 5. And then we had an ABC up. And that was, that was a good entry. The 1600 bar did a stop run, spiked into the 50% short from highs, and ran to target. And in the previous video, we were saying, if this was a 1 down and then a 2 up, the market got a little ahead of itself here, but that could be 1 of 3, a 2 of 3 back to the top of this channel that had become established. And then this was a 3 of 3 down. And then we traded it off the bottom of this 1 of 3, we traded this extension lows to lows, which traded in this little fifth wave, made a new low by 1 tick, but it did not run to target. I was sort of expecting on the way up, we had a move that spiked the blue channel and spiked the 618 target. And I was expecting the same thing on the way down, right? Spike this blue channel, spike this 618 target right here. This was the previous low over here on the daily chart, 138.14. And when we didn't run to the target for this lows to lows short, this fifth wave right here, instead we reversed, we broke the extension by 1 tick. I mean, just super technical, right? So we made a low by 1 tick, so that fifth wave sort of did the minimum it had to do. Then we broke the extension by 1 tick, and then we had a correction. And about 6 things happened here that are all really important. So number 1, I think the reason we didn't run to the target down here and didn't spike the channel is they didn't want the reaction of buying off the previous low right here. They put a floor in the market at 138.29, And this immediately reminded me of, you see this on ES sometimes, where they're selling off and they're approaching an obvious support level, like a long from lows 50% support level or something. And so what they'll do is they'll front run the support level. It won't trade. They'll pull up in front of it and consolidate for a while. And that's sometimes a tell that they intend to come back and break that level, and often with authority. So this little thing not running to target and not capturing this 618 target was interesting, number one. Number two, this ABC correction, first it broke out of the channel right here, and then more importantly, it overlapped with the bottom of this wave one right here. So that was sort of the tell that this wasn't going to be a simple 1, 2, 3 into the low reaction, 4, and then a 5 to a new low that could be buyable. And this fourth wave came up and traded the next in the series, this next short right here, held to the tick. And this was sort of the most sinister sign, if you're looking for some sort of bottom here, is that this level 142.4 was the high of the week, and it was the retest of this channel, the weekly closing variation of the channel. And I was watching this in real time right here. This weekly candle tried to go green, and for a moment it looked like that 3 candlestick pattern, where you have a red one down, a consolidation candle, and then a green one coming up and out of there. And so this, it broke the channel, it overlapped the bottom of wave one, it traded the next short in the series, and it represented a solid rejection of this weekly channel, which had flipped to resistance. So that was just sort of a huge technical development. And so if this was no longer a straightforward 1, 2, 3, 4, 5 down for a little fifth wave, then what it started to look like was a 1, 2, 1, 2. Right? There was a wave here that made a tick perfect double bottom, and that gave me pause because ZB likes double bottoms on this smaller time frame. And so I was that got me a little confused, but no long setup held. And then post Fed day, I mean, it's like every institutional trader did a fat finger sell at 8:30 in the morning coming out of this short setup. And so, the way to read this, I think, is, let me take this off. And then we traded this lows to lows extension right here. Actually, for this one right here, that ran to target today. And so I think the way to read this is simply a 1, 2, 1, 2, 1, 2, and then this wave was a 1, 2, 3, 4, 5. So 1, 2, 1, 2, 1, 2, 3, 4. The 4 again trading as a lows to lows extension off the bottom of this wave 1, and then this was a 5, which also completes 1, 2, 3, this larger 3. So we have a 1, 2, 1, 2, 1, 2. We're going to need a 3, 4, 3, 4, 3, 4, and then a 5. So 1, 2, 2, 2, like that. Right? 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5. So we're going to have at least 2 more waves down, I think. And, I've tried finding a less bearish interpretation of this, and it's not easy to do. I'm not coming up with anything as convincing or as persuasive as this series. Basically a bear nest of 1s and 2s, ratcheting up the bearish energy that then just unloaded post Fed day. So, on the daily chart, it sure looks like this lows to lows 38.2 retracement has traded, and we're gonna, you know, it we're gonna go through this 236 target. It looks like, the one kind of confusing thing about this is that, this wave one and this wave one have the same low. That was the tick perfect double bottom right there. And so if this wave 4 traded as a lows to lows extension off of this wave 1, I guess the same thing, it could be the same anchor to new lows for this wave 4 right here, right? So, if we run to target from this wave, then this wave maybe could trade the same anchor to new lows. I mean, it could trade some sort of traditional or develop a series down here, but I think that would be the sort of more conservative draw, would be coming back up to this 618 line and just making a marginal new low below this one. I hope that's clear. Said everything I wanted to say. Yeah. So, I don't know if I've already said this, but getting getting lulled into complacency by the series of channels on the smaller time frame, it got me into the wrong mindset of trying to pick a bottom for this weekly channel and not really respecting the series of weekly closes that had developed down here. In hindsight, it seems sort of obvious that this had flipped from potential support to resistance, but it is what it is and lesson learned. And as far, I've tried to draw a channel to capture this fifth wave. I have this green channel here, but at this point, what might work best is just a simple regression channel drawn from highs to lows. So if you do that, actually, oh, that basically lines up with this green channel. That's interesting. So again, 236 target is on the table, and this black trend line is sort of the outer bound of the price action in this fifth wave. So there's no point in trying to pick a bottom now for a while because we have more third and fourth waves to unwind. But it's certainly starting to look like this 618 target is on the table down here at 131, and it looks like we may just be going down for the rest of Q2. And just like the only up price action on Q1 was this squeeze at the end of the contract, we'll have to be alert for approaching this target down here at the end of the quarter, because this was a non-trivial 150. Yeah, that was a 10-point rip off of lows right there. So, as we start getting into the low 130s, we'll have to start paying attention to the potential profit-taking squeeze at the end of this contract. That's the only thing bullish to say about the situation right now. Okay, thanks guys.